Welcome back here at Goldberg. Today I'll be talking about my approach to investing. And as with anything else, you learn over time. So there isn't some grandiose strategy. I would suggest reading the book Bogleheads, which is a somewhat stripped down version of Burton Malkiel's Random Walk Down Wall Street. Short story is, unless you are super into stock analysis and you're constantly following the markets, put the bulk of your money in a low cost index fund. When we say low cost, look at the expense ratios. You should be searching for a zero point 0.0 something. I don't like when I see 0.12 even. I certainly don't like when it's over 1%. You'll see this sometimes with bond funds or American funds are terrible. Vanguard and Fidelity are your best bets in my experience. Just to put into perspective, now with VU, that's S&P 500. I've also had luck with SPYG, SPLG, but VTI, the total market fund, back in, was it 2014? No, maybe around that time, 2013. I bought into some commodity related stocks, which reputable sources said are going to go up 100%. They pay good dividends. Well, if I just put that money in VTI, I believe I would have, excluding dividends, made a 200+% return, not lost a single dollar. And it isn't to say you can never do well with individual stocks, like Apple has been good to me. Certainly Amazon, the last 10 years was a nice one. I was very close to buying Nvidia when it was $13 a share. Just never got around to it. I would have probably only bought 100, but that would have been a nice kickback. So you can do it, but I would say for the most part, if you're going to do individual stocks, focus on big names that have a large market share. Another element that I like doing for smaller companies is I like government contractors because their performance is less reliant on overall fluctuations in the markets. They're getting, assuming they can win a contract, they're doing pretty well. So I have had Rocket Lab of 300+%. There's another one related to satellites, I want to say. That's up already almost 40%. I only had it a few weeks. I'm not necessarily going to hold them long term, but it's one thing to consider. Unless you have moral qualms, defense contractors as well are something to keep in mind. I've had some desire to maybe buy Boeing, if potentially Ellen purchases it, or some have even said that Blue Origin might be grabbing onto it. Well, no, never mind. Blue Origin was, they said Spirit Airlines, but my understanding is the Spirit Airlines stock, you wouldn't benefit if they got bought out at this point. So I don't know, if someone says I'm wrong on that, you can correct me. With all that being said, funds are going to be generally ideal. Another individual stock I've considered was Advanced Auto Parts because they were down. And if Trump does tariffs and makes cars more expensive, potentially people stay with what they have, buy used, fix them up. It might help AAP, but of course you got competition. You got O'Reilly, you've got AutoZone, which is a very large company. You've got Rock Auto. So I can't say it's 100% a guarantee for me. Returning to funds, I have talked about Fidelity sector funds. FMAT, I have that's gone up. I would not be surprised if it does more due to what it's focused on. FUTI is a good kind of dividend utility, and I've had FDIS, FTech, probably made 100% on both of those. They came out with some later iterations because I didn't get into the pharma or the healthcare related options, and I should have because they did well with the pandemic. But they came out with one F Cloud. Now that had a higher expense ratio focused on cloud computing, but that did pretty well. Another thing I like are dividend funds. So some people go DGRO, others SCHD, which I possess. I've also been gradually building a position in SCHY in my taxable because there's some benefits to international dividends where the IRS is concerned. It's a very affordable fund. It's around $23, $24 per share. And I wouldn't be surprised if in the coming years we see the 40 range, if not the 60, just because money tends to flow. I've seen this with funds. Money tends to flow in their direction almost inevitably. There's some exceptions when we get to these country-specific ones. I have a Chilean option, which I'm holding on a longer-term basis, pays a large dividend, may or may not do Brazil. At one point, the TUR, Turkey, was a good option to get into. Of course, they had currency issues, but if you got it cheap, you made I think at least 20% return. I didn't do as well on the Pakistan ETF. People were going to troll me for that, but it was funny. So I broke even, sold, and then it ended up going above that. So you would have made around at least 20, 30%. The one where people did take a gut punch is if you had RSX, Van Echter's Russia, which got delisted, even though Russia's economy has been pretty resilient despite all those sanctions. So you can't always push these other nations around. It really depends. A potential option for the future would be this Nukes ETF, NUKZ. I've seen it advertised in CNBC, and just since January, it's up like 80%. Now, whether we have a bigger push for nuclear power, energy reasons, or God forbid conflict, I would not be shocked if you see a growth of like $20 a share over the next several years. Can't guarantee it, but I may very well be purchasing this option. Also, they were talking about copper. And once more, whether it's demands of data centers or potentially a conflict, that is a real deal. So if I can find a good ETF that's not outrageously expensive, I'll probably move in that direction. All right, Fundrise. I've talked about this before. Basically, a REIT service with less flexibility. You can just buy realty income, and that operates much like a stock. So you purchase it when you want, you sell it if you don't care to hold it. Fundrise does lock you in. Now, the returns and the steady dividends are, something I appreciate. But understand with Fundrise, if you put money in, it's always resetting a clock. At least that's how it was the last time I checked. So if you try to take that money out before a term is completed, there is going to be a penalty, which is, I want to say, was around 3% penalty if you withdrew it early. I put maybe a couple $100 a month into it. It's more of a long-term thing, have some side income, but I prefer the dividend funds and of course other REITs just in of themselves because I like the flexibility which Fundrise does not always provide to you. We also have Prosper, and I previously was engaged with a lending club. Now it's this platform, very traditionally Care Bear type endeavor. You might hear my hands rubbing a tad. This is investing in debt, credit card debt, other forms of debt for varying degrees of return. I think I've seen between 7 and 14%, and there are risk ratings attached to it. I go with the more conservative options, but you still have a nice benefit unless there's some moral qualms. And remember, a lot of these religious types, oh, usury, they're complaining about stuff that there was actually usury back in the day, outrageous interest rates. What we tend to pay, like for your mortgage or your credit card, which you don't pay unless you actually allow yourself to get into debt, what you tend to pay on, well, let's say you go to a credit union, the rates you're going to get, I mean, they're not amazing, but unless you go to like a used car dealership and you try to get engaged with one of their types, which is like 13 or 14% interest, but even that compared to what you were seeing back in the day, 25, 30, 50, 80%, 100% interest, I'm talking about the, 300s. There's a massive shift. And you could go into, yeah, but the Fed prints money, and so you're actually paying more, whatever. My point is that if you're a responsible human being with reliable income, interest rate should not be a problem, and you shouldn't be buying things you can't afford. So I don't have a big issue with it. Some people don't want to, but you can check out Prosper. I'm not going to go hand over fist, but I like the fact that it does give you a healthy return on the side. I like diversification as much as that has gotten a bad word on account of some people who think it's not masculine. You should just go all in with one particular type of investment. With precious metals, what I do throughout the year on eBay, purchase Walking Liberties, Franklins, try to get the ones that are certified, but it ends up being a medley, and also gold here or there. I heard that Costco is selling gold bars, but my local one does not have them in stock, so I may have to search for a different location. Now, my view with the actual physical metal is it's almost an heirloom, something you would store probably stateside and pass on to family members. As far as being able to get it out of the country, I don't know what the rules are. If you go through security or even try to put it in the belly of the plane filled with bullion, are they going to try to confiscate it? Certainly, if you're trying to flee in desperate times, I would imagine that to be the outcome. I've learned from people that lived through the Balkan Wars. They said that the Yugoslavian currency, you could go from being middle class or upper class, and unless you had international accounts overnight, it was worthless. So there were people that got wiped out due to the wars for national independence and self determination that may or may not have been instigated by Western elements. And of course, Yugoslavia fell apart, and then the country was all carved up by foreign investors. So they said they wanted their nationalism, their petty nationalism, and then they just ended up being slaves to the international community. Go figure. I also appreciate the Sprott Gold Fund. It's around $20 a share. I do put that gradually in my Roth, and I see it as it's nice to be able to accumulate at a slightly lower price point than buying the full, gold piece. Perhaps the best option if you're trying to live in another country would be to move there, get a safe deposit box, and purchase precious metals on the local market. Although, of course, you're going to be at the mercy of what those rates are. Are they equal, or is there a premium because of some kind of import taxes? You never know where you go, how things are going to be priced differently. As far as crypto is concerned, I basically DCA into Bitcoin. I'm not going to gaslight you and be, oh, I was an early adopter when it was a piece of paper with a QR code. I first became more cognizant when it was in the 5,000 range, but even there, I wasn't lapping it up left and right. So that's my mistake. But I have a sizable chunk. Whether we're going to see a pullback from this price point depends. There's Bessent as Treasury Secretary, which might be fortuitous. At the same time, Bitcoin can follow the market. So if the market freaks out, oh, nuclear war, maybe it's going to recede. I'm not making predictions here. In terms of altcoins or meme coins, now I was pleasantly surprised that more of them have gotten onto crypto.com because that solves my concern over the IRS. Every time you swap a currency, it's a taxable event, and you've got to be tracing it because all these little algorithms and Trust Wallet, MetaMask, it doesn't do it well for you. Then you pay for expensive tax preparation software, which is not even always that good. I've used it in the past. It's not terribly reliable. Now, I'm not telling you to go crazy with meme coins, but to be fair, Pepe Coin, which is a cartoon, it went up, what, 80% since the election? The Peanut the Squirrel did very well. So I bought like 2 billion of this one. It's pretty low. Again, who knows? Maybe you get a 5 times or a 10 times. I've also followed a guy. He used to do MiG2 videos. It was Real Talk with Ethan. Now he's Ethan Invests. He was talking more into the ETFs related to crypto and talking how they could go up substantially. That guy claims to have 100 million plus net worth just by being divorced. I don't know if he's telling the truth, but we'll see where things go. I'm not gonna, when it comes to these altcoins or meme coins, I don't risk serious money. I do enough where it's like, yeah, I'm in, so if it does well, all right. But I would say you have a better chance of being successful with meme coins than, let's just say, buying lottery tickets. And I'm not doing that in a kind of sarcastic way. Like, I actually think you have a better shot because I've seen people do it, and it doesn't require a super high IQ per se. Finally, more in the way of physical property, I do have a home. The advantage is you can make improvements, and at least theoretically, you can sell and make a profit or at least break even. So it's not just pissing away money renting. I was considering selling and going to an apartment so I could have a shorter commute. But by my calculations, to pay the same amount, like my mortgage, I would be living in the basement of some condo, or sorry, not condo, let's say townhouse owned by a large Indian family. Or if I wanted my own apartment, it would be pretty much close to 3 times, maybe a little bit less than that, maybe 2.5 times, something of that nature, what I pay now just to have an apartment. And of course, that's going out the window. So I'm probably going to hold on to it for now. There are pluses and minuses. By the way, as it comes to the furry fandom, I think I caught the mother because it was pretty fat, this particular one. The question is whether the offspring are going to come out or they're too young, and that could be a problem if they start rotting in the ceiling boards. I would love to get, if I could, like just 1,000 square foot bungalow, one level house for myself. And in fact, there was one locally listed, but it was for auction. It had a dilapidated roof. So I don't even know if you had to have cash on hand or an FHA loan. That would have been nice to fix up because I find my house is too large for myself. I would like to use this, rent it out to some college chicks or some dudes, whatever, and because it has enough rooms, it's got enough space that, and it has two full baths, so it would be good for a property. But I'd like to have a small area myself that I could easily keep clean and just do my thing. I don't care to have roommates as it stands now because my creative process, intellectual process, I need a measure of solitude, and I don't want to be tripping over people that are constantly, rising at different hours, using the kitchen, using the shower. So we'll keep it as it is. If there's any other ideas you guys have investment wise, be sure to drop them in the comments. And good books on it. You can talk about Bogleheads. You can talk about, it was like How a Second Grader Beats Wall Street. I think that was the title. Some of these books people would say are dated, but the principles still apply. Ben Graham. I would stay away from Kiyosaki because I think he's a grifter, but there are some decent texts out there that can really help you. And honestly, the simplest rules do apply. Keep your money in broad-based things so you're not going to lose tremendously, but you'll probably gain over time. And then maybe put some, if you want to do for speculative stuff, a bigger growth potential. So any questions, any suggestions, drop them in the comments.